I have a question for you. Are MAGA and Republican influencers willfully deceptive, or do they just not understand how to do basic analysis? Let's watch this video about taxation in California and understand where this creator is going so wrong.
40% of Californians pay lower taxes than they do in Texas and Florida.
Is that so, Gavin? That's weird. Pause to take a look at this map I found that shows the overall tax burden of each state. Allegedly.
Allegedly, you might want to look into the fact that overall tax burden and tax burden for specific income groups are not the same thing. And let's actually go through the numbers. First, let's define who's in the bottom 40% in each of these states. As you can see here, people in California earn more money than in Texas or Florida. What Gavin is referring to is this data from a group called ITEP, which showed that as a percentage of income, taxes are actually lower in California than in Texas and Florida when looking at all taxes. So the main driver of this difference is actually sales tax. Because even though the headline rate in Texas and Florida is slightly lower, sales tax actually applies to many more types of goods in Texas and Florida, including key things like groceries. Then in Texas and Florida, people also have higher property taxes, utilities are taxed, and there are more fees assessed from local governments. So overall, there are these other types of taxes and fees that are higher in these states than California. Then, this is all before we even get to the benefits people in California have that they don't have in Texas and Florida. So, yes, the tax burden is higher in Texas and Florida, but also low income folks in California actually get way more benefits. So, in California, we have Medicaid expansion, we have free school meals for all students, we have state mandated paid family and sick leave, and then we also have something called the state income earned tax credit, which we'll talk more about in a second, but that's basically negative income tax for low income residents. So, for a low income family with children in California, they are going to benefit from this negative income tax credit. So, they're going to get the federal one, which is $5,800, but they're also going to get a special California one, which will be $1,200. And California also has a young child tax credit, which will also be $1,117. So, you're going to get about $2,300 more dollars back in your pocket from the state if you are low income than if this family lived in Texas or Florida. Then also, California has expanded Medicaid, which means that adults with no kids who are up to 138% of the federal poverty line will essentially get free insurance from the government that will cover most of their needs. And the same is true for parents with kids, pregnant women, and children will all be covered by Medi-Cal, which is California's Medicaid. So at the end of the day, if you are earning $65,000 or less in California, you are paying less taxes than in Texas and Florida. And because of California's progressive income tax system, the state is helping more people live meaningful and fulfilled lives.